In fact, last year we worked with Fudan University on a white paper on energy storage risks and insurance, where we introduced a concept called stressed prosperity. What we observe is that green energy, especially energy storage, is a very large and rapidly growing sector. In China alone, annual investment in energy storage may reach hundreds of billions of dollars. However, when we look at insurance coverage, the penetration rate is still below 30% or even lower. And even among those that are insured, the coverage is often very basic. This brings us back to an important question. If this is such a promising industry with such a large scale, why are insurance companies still reluctant to participate? The answer lies in how insurance works. Insurance is essentially a judgment about future risk based on the law of large numbers, empirical data, and the accumulation of historical claims. In traditional insurance, we often rely on long-term horizons, 50 years, 100 years, or at least 10 to 20 years of data. But in the new energy sector, technologies are still very new and they evolve extremely quickly. In many cases, there simply isn't enough historical data. Even if some data exists, for example, 5 years of data technologies such as power, batteries, and energy storage systems may have already gone through multiple iterations during that time. In other words, the underlying technology may have changed several times within just a few years. So from an insurance perspective, there is effectively no stable data set to rely on. And this raises a fundamental question. How can insurers assess risk without sufficient data? And how can they price that risk? I think this is a core dilemma facing the insurance industry today. On the one hand, the market clearly has demand, and there are significant gaps in risk protection. On the other hand, insurers lack the data needed to respond effectively. What is interesting is that even a mid-sized energy storage power station can generate several terabytes of data in a single day of operation. This volume of data is enormous. By comparison, in traditional insurance, the total amount of usable data accumulated over decades may be very limited. So if we come back to this point with such a large amount of real-time data now available, and with the help of today's AI technologies, we actually have an opportunity to analyze and model these risks in a completely new way. Once these models are established, and if they can be integrated directly into energy storage systems, they can not only accelerate modeling, but also enable forward-looking predictions about future risks. This is what we refer to as dynamic risk assessment and dynamic risk pricing. And this, in our view, represents a major opportunity for the insurance industry. So we may begin to see a shift. Instead of relying purely on backward-looking analysis, we can move toward forward-looking dynamic risk projections. And when it comes to dynamic risk pricing, this is where we believe the real opportunity lies. Let me share a data point from McKinsey. According to McKinsey, by 2030, green insurance could account for as much as 42% of China's property insurance market. As for China's outbound investment, I think it is no longer just about the transfer of capital. It also involves the export of technology, standards, and integrated solutions. It is not simply about exporting products anymore. It has already become a necessity. This is especially true in the new energy sector, where China's new three industries already hold a leading position globally. However, in the process of going global, Chinese companies face a wide range of risks. We are not even talking about geopolitical risks here, but rather local, legal, and regulatory frameworks, labor markets, workforce quality, trade unions, and day-to-day operational challenges. All of these are very real risks for Chinese companies operating overseas. What we aim to do is to use technology to support loss prevention, and risk reduction, ultimately lowering the probability of incidents for our clients. In this sense, we are providing a kind of resilience support solution for the industry. We hope to bring these kinds of innovative risk solutions together with insurance products to the broader market. And we also hope to work with the new energy sector as well as the financial sector to explore new business models and drive business model transformation. I think this is ultimately what we want to achieve.